Reddy, the Managing Director of the company. Thanks so much for taking time out and joining in. Let's start off then to talk a little bit about financials. I know we spoke post the earnings, but today, what's the focus on what the next lever is going to be? What's the capex plan? Walk us through the roadmap and the timeline for the same.
See, we have done some 2,300 something on consolidated basis. We are expecting this this current financial year, it should be between 2,500 to 2,700. And then after that, second year, it should be somewhere 3,500 to 3,700 top line. And by end of 25, we are expecting 4,000 crores. This is possible because we are taking a lot of expansions. One is the one product we are launching by next month, that is dimethyl carbonate and propylene glycol, which will be coming by end of June into the production. After that, we have planned 4 new plants for the expansions. Number one is the product called tri-N-tylamine. This is again first time in the country. We are coming up with about 15,000 tons capacity. And second is a new acetonitrile plant, which is again 15,000 tons with a new technology. And the third is dimethylamines project, which is 40,000 tons. And fourth is DMF, that is dimethyl formate, again 30,000 tons. So all these 4 projects will be coming in a span of this 2.5 years. By end of 2025, mid of 2025 or end of 2025, all these plants should be on working position. So once we do all these things, we will be ending at 4,000 crores, and we expect the EBITDA margins around 25 to 26% on a sustainable basis.
Okay, so you're walking us through your overall guidance in terms of numbers, projections for the margins as well. But walk us through how you plan to fund this, and on account of this capex as well, will there be further revenue upside? Was the 4,000 crores you're talking about for FY23 top line?
Yes.
Okay.
This is the FY23 top line. I'm talking about 2,500 to 2,700 should be, because only one product is launching this year, and I'm also considering that the prices are very peak today. They may come down also. Considering all these aspects, I'm saying that it will be 2,500 to 2,700. As regards this meeting up for the capex requirement, most of the things will be from the internal accruals only. We are already prepared, and we are on the right track with the internal accruals. At the end of all the 4 projects, maybe we may need some 50 crores or something. We may go to some bank, but otherwise we have planned entire thing to meet from the internal accruals. And the expansion will not cost much, because in the first phase expansion we have done a lot of the infrastructure is already on the place, which will help to reduce these 4 products cost also, because land is there, land development is already taken place. Some of the storage is already installed for which are the common for the existing products and new products also. So we may end up by this capex between 300 to 400 crores for all these projects together.
Okay. Good morning. This is Nantara joining in. Moving forward, what we've also seen with the Balaji Amines stock price is, a lot of contribution that came in from the specialty business, right? The specialty segment business, the margins. Can you take us through how they have performed when we talk about this vertical? And going forward for the new financial year, what outlook can you provide us?
See, especially the specialty chemicals and basic organic chemicals are doing very well. Only this last month, maybe 2-3 weeks, was little low for everybody because of the China's lockdown, and now the lockdown has eased out, and all the bookings have started taking place on account of the matching raw material. Some of the pharma API intermediate companies were not getting their raw materials. Now they started getting the bookings, and the prices also and availability also has already started easing out. This will improve the tonnage of all the projects. And one thing, this lockdown has given the lesson to all the specialty and all the pharma AP industry, that now the people have started learning to live without China, I can say. In the coming years, which basing on the government policies and government attitude, I can say that most of the dependability will ease out in coming 3-4 years. Everybody has put up the papers for the new products which are dependable from outside country.
You know, we've talked about Balaji Amines, this recent stock performance, this, that, and the other. But if we were to look at the last 5 years and the return of capital, you're beating the industry. For the company, it's at about 40% plus. The industry average is 18%. Should the markets get used to this? Is this the way it's going to continue? Is it sustainable?
No. What I can say is, see, in our case, what happened, a lot of projects were operating at, a lot of the products were operating at 60, 70%, 80%. This is the time, peak time has come where all the plants, existing plants are operating more than 80, 90% capacity. And the new products are added. And specifically, I can say the Balaji Amines, we have the different product mix. Since we have 20, 25 products, so one or the other product is doing well in all these days, in the bad days also. We can see and most of the new molecules, whichever is coming in the API side, they are all required as a base raw material, one or the other material. If you take any new product is coming up, there will be 2-3 products will be used from our basket. That is how it is helping us. And as regards this sustainable, yes, it is little higher only presently, but definitely 24% EBITDAs are sustainable for our industry. That's what I can say.
Right. Okay. Great to have you on the show, Mr. Reddy, and good speaking with you as always.